the market in February and kind of hit on some major high-end important things for you to be aware of. And we'll just kind of whip around. So, John, how you doing today?
I am doing good, Drew. Hey, Drew, have you ever heard the phrase long in the tooth?
Am I long in the tooth?
Do you know what that phrase means? Long in the tooth?
Is that about age?
It is. It is.
Okay.
And so that means like getting old in age. Like I just got these glasses. I mean, that means I'm getting old. I can't see anymore. And so I'm getting long in the tooth. But it actually refers to, horses' gums that recede with age, making their teeth appear to be longer. And so as a horse gets bigger, its gums recede, and so their teeth looks like they're really long. And it's a sign that the horse is getting old. I got glasses, I can't see as good anymore, so I guess that means I'm long in the tooth. And what it really means is that my cut my hair. My wife Stacy tells me that I'm so vain because I don't like the fact that I'm getting so much gray hair that I keep on cutting my hair shorter and shorter. So maybe in a couple of months I'll be all bald on here. I'll
You just got
just
to go
shave
all the
it
way.
all off, right? But one of the benefits of being long in the tooth and working in the financial services and the money industry for so long is that I've seen things happen so many times, and good times, bad times, uncertain times, scary times, or even transitions, and what all that means. And so it kind of gives me a different perspective whenever I see things. So I guess you can call me long in the tooth with receding gum lines, which really refers more to my experience more so than my own personal teeth.
Yeah, well, and hey, being long in the tooth when it comes to investing, that's a great thing, right?
It
Makes it
is.
easier to kind of stay calm and recognize what's happening. February started off pretty well. Stocks were ripping, especially technology stocks. And then we got there towards the last week in February and things kind of went sideways. Saw some volatility creep in and stocks really started selling off. And so there's a couple of reasons that we've identified for why we think that is. Let's start with the one that's probably the most opaque, maybe not quite as clear, and that's rising interest rates.
Hmm.
Why are rising interest rates or bond yields seen as a negative by the stock market and by investors?
Yeah, I think that really is probably the big old elephant in the room that a lot of people are talking about is rising interest rates. I mean, I personally think it has more to do with the fact that I went on vacation the last week of February.
Is that how it works?
We always joke whenever I leave to get some relaxation, the things get kind of crazy. But in all seriousness, the interest rates is kind of an interesting watching it. And as so many people know, interest rates are really kind of a harbinger for things to come. And it's kind of a predictory move. So a lot of folks think that interest rates move up and down solely based upon the U.S. government and what they're doing to manipulate interest rates for some reason. They want to stimulate the economy, so they lower interest rates, or they
Right.
want to slow things down, so they raise interest rates. But the reality is the U.S. bond market is so much bigger than the U.S. stock market as far as total dollars invested there. And so interest rates have a magnified impact. And when you kind of think about it, right now in the United States, we are seeing the highest level of money in the system since 2009, the first quarter of 2009. Well, that's
Right.
right after the Great Recession, right? In which the world really kind of came to a stop because of a lot of real estate loans blowing up and the whole cascading effect. Well, that was actually the highest level of cash in the system since the first quarter of 2002.
Hmm.
Well, why is that significant? Well, we had the terrorist attacks of September 11th in New York City, and Pennsylvania, and in the D.C. area, the Pentagon in Virginia. Um, that happened in September the 11th. And so, whenever the government, folks say printing money, but whenever they put a lot of money into the system for really for some different reasons, well, that does have real world impact. Well, what's happened is the national debt over the last year, because of the whole COVID crisis and the government's trying to stimulate the economy, it's ballooned to 20, almost $28 trillion. I always kind of chuckle when we talk about trillions like it's the pocket change I have in my back pocket,
Right. Jingles.
right? But it's a lot of money. So all that money's in the system, and a lot of people, and if you're listening to this, you might relate to this. That money was intended to stimulate the economy,
Hmm.
and yet so many people, when they got their stimulus check, what did they do? They put it into their savings accounts. And
Yeah.
I talk to so many clients every day, and it's like, boy, I'm 77 years old. What do I need that money for?
Yeah.
I'll just put it in my savings account, I guess. Well, all that money is sitting in the system and it's not being really put to use. And then at the same time, we're sitting here right now with a next stimulus package, and we'll see how it all plays out. Is it 1.9 trillion? Is it 1.5 trillion? Is it 2.3 trillion? Whatever it is, it's again trillions of dollars of money in the system. All that money being on the sidelines sitting there. Well, then now we have states that are opening up, removing mask mandates. They're removing restrictions as far as on restaurants, as far as on convention centers. Had a couple more announced just here recently. And so that's the economy starting to open back up. People are getting more, some of the fear and the unknown from COVID
Right.
with vaccines coming out, the number of folks that have already been infected by that. So they have a little bit of a herd mentality starting to grow. So now there's this thought that all of a sudden we're going to see prices just skyrocketing. It's called inflation. And with that unknown, whenever we see inflation is going up, what does the Federal Reserve do? They increase interest rates. So right now the market is pushing rates higher, but the Federal Reserve's not. I mean, one day last week, man, that last week in February, it jumped from 1.4 on the 10-year to 1.62. Well, it's like, oh man, that's nothing. It's only
Yeah.
0.22%. I can't even buy my food to live on every month on that. But if you think about it, that's like a 15% increase in interest rates.
Yeah.
Well, that rattles the markets because of all the uncertainty.
Right. Right. And so we have all that uncertainty. And I think Jay Powell, head of the Federal Reserve, is speaking today to Congress. I know that if you're watching the markets here on March 4th, you maybe saw what happened when he started speaking about interest rates and raising them or not. And so that's a big deal. And that has broad implications about everything. And so John mentioned as well the reopening that's starting to happen. We know that we're getting closer to economies around the country opening up, and that's going to mean that people are going to be able to start spending money in a way that they've not been able to in the last year. And so we've had this massive run up in 2020 in tech stocks and in other high growth company stocks. And a lot of people are saying, hey, it's time to ring the register, take some profits, and rotate towards those companies, more value oriented companies, are kind of out of favor, that are going to see a nice boost in revenue generated because of the reopening. And so that was another major factor here the past month as well, at the end of the month, in that rotation that we saw.
I'll tell you what, Drew. I've talked with people even today. Appointment at 7 this morning, and they're a client of ours and working in the one of the trades industry with this company and provide support level there as an owner. And he said right now the cost of getting metal parts for their
Yeah.
equipment is just skyrocketing. The cost of logistics and delivering products is just skyrocketing. Talked to a couple of farmers today that run pretty large farming enterprises. They said their inputs for their materials, for their either for their seed or else for even some of their chemicals, is just going up drastically. Just
Right.
talked with a large commercial roofing company today, the owner, and said the exact same thing. And so the cost of goods is going up, and I think the concern is we're going to see that going on. So it's critical that inside portfolios that we start rotating. And as you all know, our rotational strategy proved to be very effective, and it's a really kind of the secret sauce. So here at Creekmur
Right.
Wealth, things that we do to try, and we're not going to get it right 100% as far as on buying at the ultimate low, selling at the ultimate high. We really listen to what the market's telling us and what it's doing. But the rotation is how we actually preserve value and also put us in a better position to grow. And so rotating to things that'll be impacted, the materials industry, industrials, those that manufacturing goods, some consumer discretionary, where people have more money to spend, they're going to be spending it. Even some of the discretionary items as far as in transportation. If it costs more to deliver steel from Fort Wayne, Indiana, over to Gary, Michigan, well, guess what? That's logistics, and so that's
Right.
transportation industry. So rotating into sectors that are going to be able to benefit there put us in the best position to be able to take advantage of the situation.
Right. Right. Absolutely. And so for us, in the weeks ahead or the days ahead, we're looking to do some of that rotating. We've already done a little bit actually inside of funds. John, high level overview. What are the areas that we're looking at maybe take some profits? And you touched on it briefly, but dive a little bit deeper to how we handle that from a systemic and just technical standpoint, and kind of look at where we're going here in the future.
Yeah. So what we're doing is we're looking at a couple of things. We start with the big broad-based economy, right? And so what are we seeing changing and developing? Um, and then from there we sprinkle on as far as governmental action and saying at that point, what are we seeing changing as far as in government? And then from there we can say, okay, now with those two things, let's look at the economy. Where are we at as far as with the economy expanding or slowing down?
Right.
Well, then we start to say those factors tell us what areas should do better in the coming environment. So, some areas that we're seeing is some of the large tech names and some of the large growth names that we have so much profits in. Those are the areas that we're looking to rotate out of. And so, some of the names we've looked at as far as Tesla, as far as on some of the ETFs that start with ARK, there should be a number of different portfolios. We're looking at rotating out of those for a couple of reasons. Some has to do with just the investments that they're in, the sectors that they're in, having run up. But also, some of those funds have gained so much in popularity that it's kind of a herd mentality.
Right.
Then, too many people get too crowded into a trade, it makes it to where it's more emotion based. So we start to remove ourselves from that.
Yeah.
As far as rotating into, like we talked before, we're rotating into a number of holdings. Euclid Capital Growth is an example, because it has a little more nimble in the way it's managed. It's kind of a go everywhere fund. We're looking into areas such as, mentioned before, industrials and consumer discretionary, into regional banks, financial services industry. Those do better in a rising interest rate environment.
Yeah.
And so rotating out of those. Also, one that we've talked about recently is even for our areas we're trying to have more safety in accounts, potentially increasing holdings inside of a target outcome fund area as far as using option strategies, but also looking at making an adjustment to bond holdings and decreasing the length of time, the maturity time to shorter term, or maybe even adding in some different trades in there that are more inflation protected.
Yep. Yep. Absolutely. And so from once we do all of that, we're going to reduce risk across portfolios. And really, what's risk? Well, risk is the amount of volatility or up and down movement that your investment or portfolio may experience in relation to how much gains or earnings you may earn. And so we're reducing volatility in an effort to say, hey, looking down the road, we think there's an increased chance for volatility for these reasons, interest rates going up and the reopening rotation. And the other thing that we've been keeping a pretty close eye on is euphoria, greed, things in the market that are kind of a telltale sign that things are getting a little wonky. And we've kind of called it the Nostradamus effect, jokingly, that John's going to use the Nostradamus to predict into the future. But what are those things that you're seeing that to you are saying, hey, this isn't saying that a doom or a big pullback is imminent, but we need to start being careful and prudent in how we're investing our funds?
It's always hard when someone's trying to predict where things are going. And as far as on trying to guess, we jokingly talk about Nostradamus trying to predict the future. I and so as you all know, it's kind of this unique relationship. Drew is my oldest son, and so I do have a grandmother Mary indicator that I look at. And I remember back at Thanksgiving, way back in 2001, and we were sitting around having our Thanksgiving dinner with the family, and Grandma Mary started giving us a couple stock tips, and so that was a sign the stock market was actually going to go down, and and so and I jokingly say that, but it kind of speaks to the point that whenever we have a large number of people have the same idea or they're hearing things a lot in the media about the market, when they continually talk about certain funds doing well or certain sectors doing well, then that is an indicator usually that we have a lot of chatter going on. And when there's a lot of chatter, that means something's happening under the surface. And so we're seeing that. We're also seeing a little bit of euphoria. And so whenever people, Warren Buffett, who's a phenomenal investor over years, as far as actual investing in companies, he had a phrase that would say, when people are greedy, you should be fearful. When people are fearful, you should be greedy. And
Hmm.
there's a lot of wisdom in that. And a lot of
Right.
that really speaks to trying to analyze when are we starting to see things get too high from an investor sentiment standpoint. And so be a little bit contrarian when you see that. And so that's kind of the things that we look at more from a societal standpoint, is to say, what are the things we're seeing in people? And I think that we can look back in society and we can say in history and say, what are phenomenons that kind of took the country by storm of interest? And one
Hmm.
was all the media. it all the play on way back in January, whenever we had a Reddit user board and a lot of communication about some different people on the board, a couple million people on that board communicating back and forth and socking it to the hedge funds, and those were
Right.
short stocks. And well, all of a sudden, was that good, bad, right, and wrong? We can talk all about, was it illegal? Was it not legal? Who was illegal? And there's lots of arguments you can have on that. But the bigger point was the number of people that were infatuated with the story. And so it speaks to there becoming a little bit of euphoria. That's typically what we see before we start to see a pullback. Think about the gold. The gold. Whenever some folks say, "Well, gold's going to go up," a sign that gold is going to crash is whenever you're watching TV and you see a lot of commercials that are saying, "Gold's going to the moon. Call us and we'll send you a envelope. Put your gold in here. We'll give you top dollar." When you
Right.
start seeing that, it's an indication things are going to start going down. So
Right.
into the behavioral science stuff. It's not always technical trading patterns. A lot of times it's simply human emotion and what are people doing, and then be a contrarian.
Right. Yep. Absolutely. So that's not to say that we think, hey, the sky is falling, the market's going to pull back, because that's not something that's imminent. The underlying economics and fundamentals are strong still, and improving rapidly in our country as we start to reopen. It's just things that we're keeping an eye on, to ensure that our clients are in the right place at the right time. So putting a bow on it and bringing this thing home, looking forward, what are we keeping an eye on? What's of importance for people to keep in mind in the weeks and months ahead?
Yeah, I'll tell you what, there's a lot of things to be looking at. One of the big things is what are you going to be doing this year for vacation? And so, and I say that jokingly, but not really. It's really about,
Yeah.
we work hard, man. Everyone works hard, and you guys are all out there, and we've been through a lot the last year and a half, right? And so it's a lot about saying, hey, what are things that you can do with yourself, with your spouse, with your friends, with your family, to go out and create memories and to use some of the dollars you've worked hard and maybe even dollars from investment accounts that are appropriate to use for a goal objective of rest and relaxation. So that's one of the things to be looking forward to. The other one is simply to say, let's pay attention to what's happening just overall in society. And again, I'm not a big person that likes watching the news for the sake of news, because I
Right.
think a lot of news is simply used to convince people of one thing or the other, to drive emotions, to actually sell more advertising, to make money for whoever the media company is, whether they're liberal or conservative. It doesn't matter. They're all the same thing about making money and influencing. But it's about paying attention to what we're seeing, having our
Right.
eyes wide open to what's happening around us, and how does that evoke emotion inside of us, and not to react from the emotion, but simply to say, you know something, there may be an opportunity here to make money. And so as you're looking at things, those are the things we're looking at to say, okay, what can we learn from society, from behaviors of people, and then what are ways for us to use that as we're spotting trends and making mathematical calculations of the best places to invest.
Absolutely. It's good stuff to keep in mind. And those are the things that we would encourage you to be looking for and that we'll be doing as well. So, once again, guys, hope you learned something. Hope this was helpful for you. We look forward to speaking with each and every one of you soon. And if anything comes up, don't hesitate to reach out to us. We'd love to chat with you. Thanks again, guys. Have a good one.
See you.